Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies for the week beginning August 9th, where we look at a couple of markets that potentially has some trade setups for the coming week. We do this video, relatively short video, for our Twitter and YouTube followers, so you get an idea of what we do every day for our DT Report subscribers. Even if you don't trade the markets that we talk about in these videos, they're educational. So what you learn, you can apply to any market in any time frame. You want to learn more? Check out our DT Reports. Check out my book, High Probability Trading Strategies. Okay, let's take a look and do a little follow-up on a lot of people's favorite market, or one of their favorite markets, and that's going to be Bitcoin. And we'll see how Bitcoin has progressed since we last talked about it. So this is the Bitcoin weekly data. I just want to bring to your attention two things about the present position of Bitcoin. Number one, the weekly momentums have reached overbought. That's a warning that we're near a weekly high. That's a high that's going to probably last for several weeks, and that high is probably within the next 1 or 2 bars. That means within the next 1 or 2 weeks. As we'll see in a minute, it might be closer to next week. And also want to be aware that the 50% retracement is not too far above last week's high. And if there's other price relationships around that 50% retracement, we want to be really alert, because frequently we get reversals around there. And I just want to say this about Bitcoin as well as Ethereum. Boy, Elliott wave and your typical price kind of targets really work well with Bitcoin and Ethereum. So let's go to the Bitcoin daily data. A few weeks ago in these reports and with our DT Report subscribers, we had a setup for a go long. I'll show you the specific dates and prices, but right around here, just coming off that July 20th low, was a pretty good setup for the long side, following this daily momentum bull reversal as well as the weekly momentum bull reversal. That was a dual time frame momentum setup for the long side. We'll take a look at that in a minute. But what I want to bring your attention to now is on this daily data, also reaching some significant price levels, some chart geometry levels. The daily momentums are bullish. Only the fast line is overbought. So typically that would mean we've got another 2 to 3 days sideways to up before we complete a daily high. Now whenever the higher time frame momentum is overbought and we make a lower time frame momentum reversal, that's a potential setup to complete the higher time frame trend. So again, this is a wake-up call. We're probably not too far from completing a weekly high, and that would be followed by at least a corrective decline lasting 2 to 3 weeks, if not longer. In fact, if not a resumption of a bear trend to a new low. So, but that's another story. Take a look at where we're at here as of the end of Friday. Is not too far above the markets, 127, 162% external retracement of this last decline. That's probably the limit on the upside before we complete the weekly high. That falls just a little bit below the 50% retracement. Gives us kind of a wide zone between 44,050 up to 46,850, which should be the limits on the upside before we complete that weekly high. And that happens to be right around where what we call the Andrews medium line, or excuse me, warning line, has a high probability of being resistance as well. I won't go into details on why these Andrews lines, medium and warning lines, are effective, but when we have nice clean swings to run them off of, they can be really helpful, particularly when they overlap with significant time and price zones. So the bottom line here between the weekly and the daily is be prepared for a probable weekly high within the next week or two, and within this zone around 44.50 to 46.80. Now that's all analysis. We're all about trading though. The only reason to do all this is to figure out how to make some money. I'm going to take a look at the GBTC. That's an ETF that pretty much mimics Bitcoin. And it's what we use in our trade alert report when we make recommendations, long or short recommendations for Bitcoin. It's a really high volume ETF, follows it quite well. So let's take a look at that. And this is just the closing data coming off the July low. Coming off of the July low, we had a specific recommendation was to go long on July 22nd, and on the close, that's 27.05. Bitcoin just happened to just right from that point continue much higher. And the long setup was we gave all the details of why we wanted to do that a couple weeks ago or so in these video updates. How significant this was, probably around this part of end of July was going to be a weekly low. So that was the specific trade strategy, was long, and we exited one half of the position. So here's a trading strategy that every successful trader uses, and most unsuccessful traders don't use, and that is you always trade multiple units, at least 2 units. You exit 1 unit fairly quickly on some minor resistance or reversals or whatever, half that position, and get, if the market trends in your direction, and you take a relatively quick profit, and that allows you to hold on to the second half of the position, or the 1/3, however you're doing it, halves or thirds, in the event that the trend really takes off as anticipated, and which is exactly what happens. So we don't adjust the stop on the second unit until the market's confirmed a continuation of the trend. So here we are as of Friday, and I think it was on Thursday, actually closed above this little swing high on Thursday. So we adjusted the stop on the second unit to a close below the August 3rd close. So we're assured a profit between 27.05 to 31.87. Not exactly that. If we happen to close below there, it would be less. But it's going to be a pretty nice profit, whatever it is. Certainly more than 10 or 15%. And this was a fairly significant profit also between 27 and 33. That was almost around a 20% profit. Very nice in only a few days. Of course, we know that these cryptos make percentage changes, significant percentage changes, a small amount of time. So you always have to then adjust your position size so that your capital exposure doesn't exceed your trading plan. Well, that's another lesson. So the point was, we showed you a few weeks ago that we're probably near a weekly low, and that we had a specific trade strategy to get long. We got long, exited half the position a few days ago, July 27th, and then we've adjusted the stop on the second half of the position up on a close below 31.87. Now, when this daily momentum reaches overbought, which it probably will do within the next 2 to 3 days, we'll then start trailing the stop much closer to the market. That's part of the trade strategy. Remember, we're traders, not forecasters. So once we get in a technical position to complete that weekly high, then typically we'll look to exit just on a lower close. So that stop can be trailed and adjusted every day. Well, that's Bitcoin. Let's take a look at another market, one of the stock indexes. We're going to take a look at the Russell Index, because the Russell Index has been just the purest Elliott wave pattern positions, and helpful to identify the reversals in this market and whether it's relatively strong or weak. Different indexes at different times are relatively strong and relatively weak. One thing that does warn you, when they're not all in sync, trending in the same direction, is there's a change coming. So in other words, a wide-ranging bull market where all markets are bullish, so they're all continuing to new highs relentlessly. That's a strong bull market when you've got some making new highs, some not making new highs, some continuing in at least short-term bull trends, and some in bear trends. That's a wake-up call that something may be happening. Let's take a look at the Russell, because boy, it's been a beautiful one on pattern position over the last several weeks. This is the Russell weekly data for the September contract. First thing I want you to notice is over these past several months since the March high, 6 weeks to the next high, 7 weeks to the next high. Last week was week number 7. That alone is a wake-up call, potential weekly high. Now here is the contradiction. Look down at the Russell weekly momentums. The Russell weekly momentums are dual look-back bullish from the oversold zone as of last week. That typically is a really good signal that the market's got another 2 to 3 to 4 weeks of net bull trend. And of course, that's a possibility. All things are possible. However, the pattern position is telling us something completely different. And as I tell our subscribers, in most cases, the pattern position trumps the technical, any other technical position, particularly because all of the other indexes have either overbought or bearish weekly momentums, just the opposite from the Russell. So even though the Russell has this bullish weekly momentums, the pattern position is saying something just the opposite. So coming off of the June high back here on the Russell, beautiful 5-wave decline into the July 19th low. The advance off of the July 19th low, here's where the information is that's the most helpful to us. This is a corrective pattern. As of early last week, the Russell had made an ideal ABC into the 62% retracement, and then it came down to close well into the closing range of the wave A. That's called a closing overlap. That indicates this indeed is a correction. It may not be complete, even though it was in a position to complete an ABC, but if it continued higher and made a new high, it should be part of a correction, just a correction other than an ABC. So here we are as of the end of last week, and we did make a new high and a new closing high. We have to look at this as an A, B, C, D, E. That's the second most frequent type of correction after various ABCs. And if that's the case, we should be within a couple, 3 days of completing this corrective high. Why is that important to us? What happens when a correction is complete? And why is it some people formulate their entire trading plans and identifying the end of corrections? Because when a correction is complete, the trend prior to the correction should continue to a new extreme. That means that when this correction is complete, eventually, that is, if it's a correction, the odds are eventually the Russell will continue a bear trend below the July low. So that's really significant. So if we're within days of completing a correction, and the next daily momentum bear reversal is likely to complete the correction, although we got to confirm the completion of the correction, we got to come down and take out the most recent swing low, close below 2191.70. For those of you who follow the market during the day, we make the bear reversal in the daily momentum, and we can immediately initiate a strategy to go short if we can identify a specific trade setup with acceptable capital exposure. Maximum the upside is likely to be around 27.75. That's the 100% alternate price projection of this little wave seed, not too far below the 78.6% retracement. So we should be within a couple days of completing this corrective high in the Russell. What does that mean for the other indexes? Probably within a couple days of completing a weekly high, a high that's going to be fairly significant, because if the Russell completes a corrective high, resumes, I should say, the bear trend, other indexes, they're all going to pretty much trend in the same direction. Most of the time anyway. But the Russell, beautiful, beautiful Elliott wave lesson here that you can put to practical use here in the next couple, 3 days. So that's what we're looking at for the cryptos, and particularly Bitcoin and Ethereum, for the stock indexes, and particularly the Russell over the next few days. If you'd like to keep up to date on these markets and a bunch more of them every single day, check out DT Reports. Take care.